Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor, and it's Tuesday. The question is, do we have a Santa Claus rally coming? Who knows? I mean, who knows? But the markets seem to be moving up very nicely, and this is the time of year which it seems to, stocks tend to rally. Now, the state of the economy isn't all that great. I'll be honest with you. I'm not an economist, and I can't tell the future, but I can look at trends. And right now, there's still a whole lot of money sloshing around looking for a home, and a lot of it's going into the stock market. Now, the real estate market may be getting a little bit soft, but it seems as if, money is still moving into the stock market. So this is a kind of an interesting thing. I mean, can we benefit from that? I don't know, but I'm certainly going to try. That's for sure. And we're still in this confirmed uptrend, and I want to kind of show you this, this chart here, because here's the S&P, and it is looking very good. It's up today, about 0.4%. Also, the Nasdaq Composite, and this is kind of where all the growth stocks live, that's going up too. So it's almost at this 16,000 level, which, if you look at it carefully, and if you've been watching my show any amount of time, you'll know that this is a very auspicious pattern. You get up here, it pulls back, and then it makes a run. And if it crosses this 16,000, it's very close, as you can see. That's very auspicious. That means it probably, believe it or not, is going to go higher. There's just a lot of money looking for a home right now. So, hopefully we can take advantage of that. Interestingly enough, and I kind of want to show you all of the indexes here, but the Dow Jones is up today, the S&P is up, and the Nasdaq. So it's looking fairly strong out there. It's looking fairly strong out there, and hopefully we can take advantage of that. Now, one of the ways that you can take advantage of that, and I had a question from the Discord room, and by the way, this is an excellent if you want to take your trading to the next level. What's great about this Discord room is that we tried it. We have some very good traders in there, and we try to kind of educate as we go. And there's many benefits. It's not very expensive, of course. But you can get on it just by going to if you're looking at on TikTok, just go to my profile, click on the link, and you'll see where the special Discord service is. It is a pay service, but a lot of people do get benefit out of it. If you don't want to go that route, and I can understand that because you want to get your feet wet, go on the special trade alerts. That's also available at Dallas Trading Floor. So a little plug there. But very interesting as it comes to, what's going on. Now, I have been making some buys today. Here's one that I did buy. Now, this is kind of interesting. I bought this totally on the technicals, and I'm not an expert in. I've seen these stores around. I've never been in one. But it's called Tilly's, and it's in a very good part of the economy. The retail section of the economy, of the stock market right now, is the number one area in the market. That's where the money is flowing to, at least for this week. So it's very, very interesting. Tilly's is one that is looking very, very nice. We're going to have some earnings on Kohl's, which is also a big department store. Department stores are the number one area in the market right now. Now, Tilly's is not a department store, but it's in the retail sector, and that is getting a lot of love right now. I did buy this one, today. We'll see how it does, but it's looking pretty good. It's called Tilly's, and I did take a position in it. So, we'll see how that works out. I've been adding also to some positions that I currently have. One of them is the Trade Desk, and this is one of my favorite stocks, the Trade Desk. Now, this is a very interesting story. Now, this has nothing to do with technical analysis. This is sort of fundamental analysis, but this is a very interesting company. It's in a very interesting space. If you want to do advertising on the internet, you really only had two choices up until relatively recently, and that was Google, of course, and then Facebook. But guess what? There's this company called the Trade Desk. And the interesting thing about the Trade Desk is that it allows you to buy ad space, digital ad space, on a myriad of other platforms. I mean, it could be anything from, I don't know, it could be anything from a news site to anything. But the trade desk is very interesting in that it is in this interesting area of the market that which I think is going to be tremendous in the future. Very profitable company. Now, if you've been watching me for a while, you notice that it went through a 10-for-1 split. So this is a little bit, this chart you're looking at, you're like, wow, this is pretty weird, but it isn't quite what it is. It split basically back in the September timeframe. Didn't do anything, consolidated. And then when it came out with earnings, the earnings were awesome and it gapped up. I've been trying to buy it as it's moving, making this move. Now, this is my third buy on the trade desk. So I probably won't buy any more of it. But and unfortunately right now, if you were to buy this now, it's probably not at the best time because it is a little bit extended. But but this is a stock that I did add to this today. I added to the trade desk. Now, here's a stock that I've been rebuying. I did sell this into strength. I did sell this one into strength as it gapped up. Then I put a tight stop loss. It pulled back. I sold out basically, and then it rode down. And now I'm starting to re-add the position. This is AMD, also in one of the top groups. Just very strong. Just a very, very strong stock, and I think that, this is one also. Now, this is probably more buyable right now than the trade desk is. So interestingly enough, this one you might want to look at. Very strong relative strength, 95 relative strength. So very, very strong. Good part of the market, and just overall a very good stock, I think. Anyway, so let me give you kind of the rundown on my small portfolio. Now, this is not all the stocks that I'm in, but this is sort of my demonstration portfolio that I put out there for everyone so that they can kind of see how I'm trading, how I'm doing, what I'm doing, kind of all the kind of thing. Okay, this is basically the way this is. I've been in the shoe carnivals. As you know, this is one of my favorite stocks. I know it's funny because, why would a shoe store do well? I don't know. I don't know. But I guess people need to get new shoes. And it's been a very good stock. I've held it for 14 days, and we're up about 16%. So it's very nice. Now, it's coming into earnings. So this might be a little bit concerning because, it's probably going to pull back from here. But typically what I do is if I'm up more than 10% in a stock, which I am currently, into earnings, I will hold it through earnings. So 1 day to earnings. So I'm going to hold it basically through earnings. Now, it probably will pull back a little bit, but I have enough of a cushion where I think I won't round trip my profits there. My stop loss here is at 38.70, and I've been in it since November 3rd. So that's one that I like. This is also in the small portfolio, Ford Motor. I've been in this one a little bit of time, 20 days, not a whole lot of time, about 3 weeks. And I'm up about 12% on it. We got into that one on the 28th of October. And as you know, Salesforce, of course, I've been in this one a little bit longer, almost 2 months now, but it's up 8%, so I'm pretty confident. CRM, I try to buy these stocks at the best buy points, where they're coming out of a base or possibly before they reach the buy point. That's where I'm trying to buy them, because typically in this market, at least the way it's trading, that has been where I've gotten most of my success. Now, going down here, ASML, this is a chip equipment company maker. This is the largest value stock in Europe that's based in Europe. It's up 2%, not a whole lot. I've held it for 13 days, about 2 weeks. This one is just kind of slow and steady. This is a very good long-term stock, quite expensive though. But we have a lot of time till earnings. We have 63 days, so we'll see how it trades. Tilly's, of course, I talked about that one today. About 2 weeks to earnings. Hopefully I'll be up 10% so I can hold it through earnings. I'm hoping. Just bought that one today. And then, of course, yesterday, 5 days ago, I bought Rambus. This is a chip company, and I bought it out of a base. It hasn't really gone anywhere, kind of stayed right at that pivot. So hopefully it'll do a little bit better. I do like the stock a lot. It's an old stock, but it's been a good one for a long time for a lot of people. Here's my here is my lineup. Let me see if I can. Yeah, there we go. Here's the lineup of the stock, all the stocks that I own currently, and how they're doing today. CRM, of course, we talked about that one. That's up. Robert Half, this is an old favorite of mine. This is in staffing. I'm hoping I can hold this one. I held this earnings successfully, so I just really like this stock. And if it gets to another base, I'll probably buy more of it. But right now, holding on to Robert Half. QQQ Trust, this is the Nasdaq 100, and this is part of the strategy that I use for money that I'm going to need within a year, basically tax money that I need to pay. Is I'll invest it in this. If the market is in a confirmed uptrend, I'll be 100% in this. If it moves to a market trend under pressure, I'll sell half. And then if it goes into a correction, I'll sell all of it. And then rinse and repeat on this one. And if you do this, typically you can quite safely get, I believe, almost 10 or more, maybe even more percent on your money a year. And I'm going to talk about this in a little bit more detail. I'm going to probably make a little video on this, because this is really a powerful way to trade in funds that you're going to need in less than 270 days. That's how I trade this one. So it's kind of a neat one, but I hold it. It's up today very nicely, $3.17. This is kind of chugging along. Down a little bit on IIPR. This is Innovative Industrial Properties. This is a REIT that basically is in the cannabis space. Does quite well for a REIT. Little off 3 cents on Ford. Not too worried about that. Ford has been a powerful stock, and I think it's going much higher. Finally, we had a rebound on Tesla. My average price is right at about $10.50, so I'm basically break even right now on the Tesla stock. I think it probably will go higher. Elon Musk's tweets are driving me crazy, but he's Elon Musk and I'm not, so hey, he can do what he wants. But it seems like even with the selling that Elon is doing, it seems like that's firming up. Shoe Carnival's up today again, but remember, tomorrow is earnings, so probably this is going to pull back a little bit. Who knows? But it's up $2.11. I really like Shoe Carnival. Not a very big company, but I shop for shoes there, so I think it's really good. Anyways, my girlfriend likes it too. ASML, that is also a up today. It seems like it's a lot, but it's a very expensive stock, so not a whole lot up, about 0.5%. Rambus is up, of course, and then we talked a little bit about TTD. This is a stock that I really, really like, and we talked about that a little bit. Blink Charging is down. This is a charging company. I think this is the best, personally, of the charging companies. There's EasyGo, there's Blink, there is ChargePoint, but I like this one the best. I've been trading this basically a little over a year. I traded it last summer very successfully, kind of when this whole thing kind of started. So Nike is up, and this is kind of in the same theme of, shoes and apparel seem to be doing very well. I guess they are going into the holidays. This is up about 1.87%. Volume's down though, but this is a big cap stock. This is the biggest manufacturer of sporting goods in the world. So Nike, it's not a bad place to buy it. Also, Ultra Clean. This is one I talked about yesterday. This is one I was buying yesterday. It's up a little bit. Volume is down, but it was a very nice pattern. And of course, Tilly's. This is the one that I bought today, and I really, really like. So that's kind of the long and the short of it for all the stocks that I'm currently in. Also want to show you the results of some of the spread trades. And of course, if you're on the action trade alerts, trading options is a great way to make money, especially if you want to buy excellent stocks that you can't buy too much of, and you want to trade them using options. Here's a trade that we put out to all the members that were on the free action trade alerts. This is the Domino's bull put spread. Now, Domino's has been struggling a little bit. I'll be honest with you. This has not been a straight ride up. This has been more of a kind of pullback, and now it's starting to get some love. Now, by the way, this is out into the December timeframe, so we're basically in the last month of this trade. So I don't know if I'm going to close it, but it's been doing nicely in terms of its numbers. It was up $9.51 today. So hopefully we're going to go into the green here pretty quick. I'm hoping. And this one has a potential on each contract of about $1,200 profit. So hopefully we can get up to there. That would be great. It needs to get up to about that 560 level. That's kind of where it needs to get, which is quite a bit of ways. I mean, that's about 8%. So we'll see if we can get there. If we can't, what we'll do is we may roll this one out. That's a great option when you're doing spreads. So you can sometimes roll out, give the stock a little bit more time to make its move. So on this one, I would probably just roll out maybe another month if it doesn't achieve, basically by the end of the month. If it isn't in the green, probably we'll be rolling this one out. But very interesting, spread trades. Hopefully, I'll have more of those for the people on the free action trade alerts. We'll show them more of those. It's really, really great way to go. Here's another one that I really like, and that is, this is a this is a bear trade. Say, Jim, well, what's a bear trade? Well, a bear trade is where you make money when the stock goes down. And that's been the case with Zillow. I don't know if you've been watching the news on Zillow, but they were in the house flipping business, and unfortunately, they didn't calculate it right. They're losing a lot of money, and they're selling all their houses at a discount. By the way, if you're interested in the housing market, it's starting to make a turn. And so coming into the end of the year and possibly next year, we're going to see in certain markets probably a fall off, like in Austin, and there's a lot of other markets. But Zillow, unfortunately, was very much of a darling of everybody, and it's not doing very well. But if you have a bear put spread, you can benefit from this, and that's what we're doing here with this spread. Right now, the value of the spread, it's about 143, but we've got a long time to go. We've got all the way into January on this one, and possibly the potential on this one is about 560. So for basically for profit. So this would be basically 100% profit approximately on this original trade. But again, this trade is available on the if you're on the action trade alerts. I put that out there on that. So now that I have yammered on, we will get we'll start taking some questions, and let me just pull up my charts here. Just pulling up my charts as we speak. There we go. All right, and we're going to just take a look at the Nasdaq. At the Amex. There we go. Nasdaq Composite. That's kind of what I want to look at first here, before we get into the questions. And this is really sort of the this is sort of where I like to be, because the Nasdaq has many of the highest growth stocks, as you well know. Not that the Dow or anything like that is bad, but this is a good indication of sort of the overall market for tech stocks. And right now, as you can see, we did make this test, basically 1, 2, 3. But last week we tested below the 10-day line. That's this little pink line here. I don't know if you can see it. Hopefully I'll get a bigger cursor next time. I'll get a bigger cursor so you can see it. We tested at that 10-day line, but guess what? It just got some strength and it just kept moving up. Currently, it's moving up today. I do expect that we will probably by the end of the week, there is a little bit of resistance right here at 1600. But it looks to me, this is why I'm saying this might be a Santa Claus rally. It looks to me like we may have some smooth sailing for a while. So that's a very good thing, at least from where I'm standing anyways. So thanks, and let's get into some of the questions. Thanks so much. Let's look at Shoe Carnival, and this is SCVL. I don't know how they're going to do, but I think it's going to pull back a little bit. I just can't see how it can continue to move as well as it has. But I guess when it gets right down to it, people like their shoes. I know that people really like shoes, and it just seems to be doing very, very well on this chart. By the way. And by the way, I'm showing you my charts, which are MarketSmith. I don't get any money, unfortunately, for recommending them, but I think they're excellent charts. This will cost you a little bit of money, but I use these exclusively. There's other charting systems that are more expensive, some that are less expensive. By the way, if you wanted the second best charting system, and it's free, by the way, and that would be Thinkorswim. And Thinkorswim you can get free if you have an account at TD Ameritrade. So I do pay for this one. It's just because it has some things in it that are just incredible, like pattern recognition. But this helps me trade. But this blue dot means that it's had a tremendous number of people are coming into the stock. I want to show you this on the volume chart as well, because you kind of have to be a volumologist. That's kind of what they call it. You notice how the buying here has been moving up, and these blue bars mean not only is it the buying moving up, but the price, but they're moving up on the price. So they're buying in more of it as the price is going up. That's pretty good. So I think that that's looking fairly good. The question is, what are the predictions for the, for the stock? Well, let's see. In July, their sales were up 10%, but their profits, and this is the key, were up 340%, which is incredible. In the April quarter, that's the first. So, first quarter of the year, the shares were the sales were up 6%. In for the first quarter last year, the first quarter, 123% up. Second quarter, 10% up. Now the question is, what's going to happen tonight? Who knows? It's off a little bit after hours. We will see. Let's see. I don't know if there's any news on this yet. Hot stocks. Oh, and by the way, retailers have been doing very good. I've been trying to increase my exposure in the retail sector. Now, Kohl's, which is potentially a very good department store stock, that's reporting tomorrow. So that may be an interesting one as well. But here's the thing. I think that, the earnings are going to the earnings are going to beat this time. I really do with Shoe Chronicle. Now the question is, will it pull back? Well, probably. I suspect it will pull back a little bit I do think that we will get support right at the buy point, 42, about 42.50. We're going to get support there. So I'm pretty bullish on this one right now. And I do think it is likely to stay in the buy zone. So we may have another bite at the apple here on Shoe Carnival. I hope so, because I kind of like the stock. All right, let's take a question from TikTok. Thank you so much for everybody. By the way, if you're interested in looking at the charts and everything, I can't broadcast them directly on TikTok, but if you go to this address, you'll be able to see it directly today, right now. Also, if you're on TikTok, just go to my profile, click the link, and then you'll just be able to click right on where it says where it gives today's show. So thank you very, very much for that. All right, so let's take a look. Oh, Nvidia. Should I keep Nvidia into earnings? That's an extremely good question, by the way. Nvidia, as you know, has been a fantastic stock, but I want to show you the chart on it because so that we can kind of see sort of where it is. Now, if you'll notice, in the last few, it's been kind of wedging in. It's been getting, the action has been getting tighter and tighter and tighter. Now, earnings for Nvidia are in one day. So here's my strategy. I wouldn't buy Nvidia right now, but I do expect, and as you can see, it's starting to move after hours. I do expect that we're going to get a pop on earnings. And, I do think earnings are likely to be very, very good for Nvidia. This is the past. I kind of want to show you how it reacted. Last earnings, there was the believe it or not, their earnings were up 89%. That was last quarter. The quarter before that, up 102%. Can you believe that? That's tremendous. And then the first quarter of the year. So this is going to be for the last quarter of last year. So the first two quarters, the last two quarters has been 102% increase and 89% increase. So I'm very confident that Nvidia is going to have a very good earnings. And as you can see already, just from the last one, their cash flow is $11.90 a share, which is tremendous. By the way, this is a premier stock, and I do think that it's going to hopefully give us an opportunity. This is not the greatest buy point. I will be honest with you. The buy point is at 230, and currently it's at 302. So it's very extended. But I am a big fan of buying on earnings if there's a pullback. And there is this wedging action, as I indicated. So I sometimes will buy on secondary buy points. And right now, as you can see, since it broke out, it's just been going right up this 10-day line. So there is support at the 10-day line. So I am very bullish on Nvidia. Now, to answer your question, should I keep Nvidia into earnings? Here's what I would do. And you may not like me saying this. If you're up 10% from where you bought it, absolutely keep it. If you're not, sell half of it. And the reason I say to do that is because you want to protect your gains. You want to sell into strength. It's really interesting. One of the best ways to do this is to buy into strength and to sell into strength, and to just basically go away when there's weakness. So that's the reason why coming into earnings, you want to be up. About 10%. Then you can hold it through earnings. Otherwise, you should consider reducing your position, either all of your position or half of your position. So I would say if you're up 10%, sell half, and I think you'll be very, very pleased with the result. Okay, let's see. What do you drink? What do you think about Wish? Well, I wish it was better. This is another question from TikTok. Thank you very much. WISH, and this has not been doing well. And I kind of, I hope not to be so much of a negative Nelly. I don't like to be a negative Nelly, but this is not a stock that you want to own. It's got a relative strength of 1. This is the worst. You can't get any worse than that. 1 out of 100. That's not very good. The trend, if we go over here to the weekly, has been down. So it's wah, wah, wah. I need to get a wah, wah, wah thing because you just don't want to own this one. And interestingly enough, the chart is very predictive. And look at what's happening. We're seeing declines in sales, and it's not profitable. Boy, that's not what you want. So here's what I'm saying on Wish, and probably not what you want to hear on symbol WISH. If you're down more than 7% on this one, sell it immediately. It's just find a better stock. There's better stocks out there. Listen to my show. I will show you better stocks. I'm not guaranteeing anything, but you want to buy in the top of the market. This is in the bottom of the market. Right now, retail internet, it's okay in terms of where it is, but this is not one you want to buy. So context logic, symbol WISH. I think you just can't do it right now. Just not looking very good, unfortunately. So I would sell it. All right. MB has thoughts on two companies, Lucid, which unfortunately I was not in. I should have been in this one because this one has just, and everybody was saying it, and dumb me, I was just following, trying to follow the rules. This is looking fabulous, absolutely fabulous. I don't know if you remember that show, Ab Fab. Probably not this 40 time, but this one is looking really, really good. The question is, can you buy it here? It's got a relative strength of 99. Very different than Wish, the one that we just showed the chart on. This one has reversed and it is moving higher. Unfortunately, the cup with handle buy point is 28.39. This is at 56, almost double that. It's pretty far extended, unfortunately. So this is kind of like one that I'm going to have to say, if you're not in it, I wouldn't get in. It's too far extended. If you're in it, congratulate yourself. You have done very, very well. But right now, Lucid is extended. Gotta wait to buy. And that's not, you know, always like this, always like it when, um, but right now, oops, get rid of these ones. So right now, LCID is extended. Don't buy now. And that's kind of sad because it's doing so well. So if you're in this one, congratulations to you. You have done great stuff. But right now, Lucid is extended. So don't buy it but wait for it to come back down, possibly to the 10-day line. That's going to be where, it's when it comes closer to that might give you a second chance. Super duper chart, but you just don't want to go chase. You don't want to chase. That's the thing, and that's the hardest thing to learn. I mean, FOMO is very real. Fear of missing out is very real. I have it all the time. I have to control myself because when something's going up with this, I just want to jump in with both hands. But I've actually looked at my trading records over the years, and FOMO has caused me much heartache. So don't FOMO on this one. But it's a great stock. If you're in it, congrats. I mean, you're doing great. But don't chase it. Don't chase this one because I think that you could get really hurt as it pulls back. But it is definitely watch listable, and it's definitely a good stock. Now with NEO, it's a little bit different. We're waiting for this reversal, and I'm highlighting the line, the reversal line. So let me reactivate that line. It's having a lot of trouble. NEO's having a lot of trouble moving above this reversal line, and above that reversal line is the 200-day moving average. It's having trouble moving above that. So right now, it seems as if NEO, this is not the greatest place to buy a NEO right now. It's not a bad stock. It's just not in a good position. Here's what I'd recommend looking at, and I was looking at this today. Based on everything. Here's the stock I was looking at today. If you want a Chinese auto stock, and by the way, BYD pulled back. I think that Lee Motors is probably the one. Now, I'm not in this, but this one has reversed, and I kind of want to show you that. It came down to the 40-day line here, and boom, it moved nicely. What am I talking about with these moving averages? These little lines here, this black one, red one, green one, and pink one. These are the moving averages. And interestingly enough, much of the stock market is traded by algorithms. So these moving average lines are very, very helpful in knowing when to get into and out of a stock. A stock typically will come down, and when it reaches a certain level, the algos will come in and push it up. So you can see these are places that you can look to see if the stock will bounce. Now, Li Auto has come down, and it has bounced right here with a fair amount of volume. Do I recommend this one? Not really, but if you're looking for the Chinese autos, this might be a good one. 80 is the relative strength on it. Let's look at the checklist to see kind of how it's stacking up. Right now on the checklist, it's a 56 checklist, which is below my standard. I typically like to see at least 6 out of 9 criteria that it's meeting. So it doesn't meet the standard. So if you're looking for an auto stock, Chinese auto stock, this is the one maybe you want to look at. Currently, I'm in 2 auto stocks, Ford, and I'm in Ford as well as Tesla. Now, unfortunately, you can't buy Ford at this level. It's extended, but I do like Ford a lot. If you're looking for a stock that I think is going to do very, very well in EVs, and I know this is not the normal way of looking at it, but there's only 2 companies, American automobile companies, that have never gone bankrupt, and that's very interesting. I think you should know this. One of them is Ford, and the other one is Tesla. So those are the ones that I think still have the best management out there now long term. So I do like Ford long term. If you're interested in the EV space, I think this one has legs, and I do. The reason I do is because I think the real market for EVs is going to be in cars. Obviously, Tesla's going to be in that, but I think the real market for EVs is going to be in these little delivery vehicles. I think they're going to do fantastic, and Ford is an absolute leader in this space, and they make truck bodies. $46,000 will buy you a Ford EV truck body, and I just think plumbers and other companies they're going to be putting their stuff on these truck bodies. So Ford, I think, has some very, very good potential in the EV space, and it's kind of not where you think of it, but I do think in these little delivery vehicles is going to be a tremendous area for that. All right, I have a question from TikTok. This is on Rivlin. Of course, that just went public, and it's just been going almost hyperbolic. Should I buy it? And the question is, should I buy it at 170? Well, let's look at it. RVIN, no, RVIN, is that right? Yeah, RVIN. Just started trading, by the way. RIVN, excuse me. I sometimes get these wrong. Rivlin, there we go. Talking about the automotive, kind of keeping it real with the automotives. It's pulled back a little bit after hours. Here's where my recommendation on Rivlin. I think what's going to happen is now we're going to get what they call the IPO base. So here's what I would do. I would wait a little bit of time to buy this one. Why? Because the time obviously to buy it probably was when it broke out. It was probably right here. But I didn't do that, and I didn't do that because I typically like to see I like to see these season a little bit. I like to see the IPO season. I definitely think this has legs, which is kind of amazing. And I like the fact that there are in the high end, and they have that. I believe they have some support from. I believe. I don't know. One of the big companies is in it. But anyways, I want to wait on this one a little bit until it forms an IPO base. So it's gone up here. It's seen its upper limit. The upper limit probably, at least in the near term for Rivlin, is probably about 180. That's probably where it's going to have some resistance right there. Okay. So what I think is going to happen is that we're going to see it come down, and it's going to find some support, and then possibly it'll go back up like that. So I think what we want to do is we want to wait and see. We kind of want to watch list Rivlin for right now. I think it's too soon. So what I would do is watch and wait on RIVN. For right now. That's kind of what I would do. And I wouldn't buy it right now because I think we're buying on the wrong side of the base, and that may not be the best place to buy it. I like the stock. I'm not saying don't ever buy it, but I'm saying wait. And waiting is a hard thing to do. Waiting is very, very hard to do. I know, because I always have a lot of FOMO, fear of missing out, and waiting could be very, very difficult. Very, very difficult. So let's take a question out of context. I like that. Saudi football. I like that. Snap. Let's look at Snap. And hopefully, if you're watching from Saudi Arabia, welcome. We have many people in the Middle East, and I'm so honored that actually anybody is actually listening to me from over there. So that's great. So thank you for that. Hopefully that's the case. Here's Snap. Of course, Snapchat has exposure to Bitcoin, and Bitcoin has not been faring well for the last 2 or 3 days, which is strange. I would have expected it to do better, but right now we're basically in this consolidation range, and it looks like we're getting some support at the 40-day line. But really, in order to buy this, you really need to be over about $80. Currently it's $55. It kind of fell off the edge of the world. See, let's see if you can see this. It had earnings. This is why you don't want to hold into earnings, folks, because when you have earnings, and even though these earnings were tremendous, for some reason they weren't good enough. Can you believe that? It's up 1,000%, and the stock dropped. So there's a lot of expectation that for some reason it wasn't met. So now We're trading below that 200-day line, and boy, that's really tough. So this is what I always say, going into earnings, and this went into earnings, if you're not up 10% in the stock, that's where you want to sell it. Wait, and then if you could buy it on the other side, that's a good thing. I wouldn't buy it currently, and why? Because it's trading below the 200-day line. Now, why is the 200-day line so important? Well, the reason the 200-day line is so important in stock buying is because the 200-day line shows you if capital is moving in or out of the issue in general. Now, here's what I'm saying on that. It's sort of like the tide. You always want to go with the rising tide. If you have a retreating tide, you don't want to be in a stock. Right now, Snap has a receding tide because it's below that 200-day line. So my advice on Snap is if you're in Snap, and you're down more than 7% from where you bought it, not from where the stock is, but from where you bought it, consider selling it now and then waiting until the conditions improve and buying it back, because it's a good stock. And I'm not saying it's not a good stock, but there's no reason to give up profit when you can be getting ready and finding a better place for your capital. So right now with right now with Snap, I think you just got to I think with Snap you've just got to wait and watch Snap. If you are down more than 7%, so consider selling and waiting for a better entry. Now, just because you have sold something doesn't mean you can't buy it back. I do this all the time. As a matter of fact, I just did this with AMD. So with Snap is good. Snap is a good stock, but we want to wait because it's trading below that 200-day line. I just don't like that. We want to wait and then possibly buy it as it's moving higher. So if you're down more than 7%, really do yourself a favor, liquidate the position, and then get ready, and possibly we'll get back to a place where you could buy it at a better entry. Right now, it's not a good entry to it. Okay. Question, Jim. Your thoughts on Rivlin, please. I bought some shares at 107. Oh wow, that's excellent. And we're getting here's what you do. Here's what you do, Hans. Fantastic move. I wish I was in your camp, but here's how I would pay Rivlin. Thanks for watching, by the way, too. RIVN. Here's what I do. I don't want to second guess the market. I want to let the market tell me what to do. So I'm going to go here back to the back to Hans's question. Here's what I would do. If you bought at 107, that is a tremendous. You bought right at the IPO, so that's excellent. That is a super good entry. Okay. Here's what I would do. I would move my stop loss up and I would set it right about here. I know this is very, very aggressive, but what's probably going to happen is we're probably going to get a pullback tomorrow, probably to about 150. So here's what I would do. I would set a stop loss at about 165 or so. So that's kind of what I would do on Rivlin if I was in your enviable position, is I would set my stop at 165 because I do believe on Rivlin. And the reason for that is because we want to capture that profit as it's pulling back. We can always buy it back. We can always buy this back. What's going to happen, I almost can guarantee you tomorrow, is we're going to see a pullback probably to 150, maybe lower than that. You want to capture that profit, and then you can buy it again, because what's going to happen is it's going to form a kind of a cup, and then you sell it now, wait for it to pull back, and then just when it pulls back and then reverses higher, that's where you want to buy it again. So I would recommend selling my stop by setting my stop loss at 165. Why? Because at 165, when it pulls back, you want to capture that profit. As you can see in the after hours, it's already pulled back to 168. So it's very likely not to be able to hold this tomorrow. So, don't round trip your profit. You've done excellent by buying that on the breakout. So you've done very, very well, Hans. And you just don't want to give up that profit because profit's hard to come by. So I think that's really, really good. All right, hey Jim, can you show us your stock? Show us your favorite way of finding stocks to invest. Good question. Well, here's what I do. I look for stocks, and I'll just go over this really quickly with you. Kind of, how do I, like Jim, why do you have all these stocks? Well, here's what I do. I look at the sectors in the stock market. So I'm always looking to put my money where all the big boys are putting it. And typically that's going to show us, we're going to be able to see that. Let's do that. Okay. Now hopefully I'm going to hopefully this will, there we go. So, let me see if I can, there we go. So here's what I want, here's how I find some of my best stocks. Here's how I find some of my best stocks. What I do is I look at this listing, and this is kind of proprietary. So unfortunately, you may not have capability of this, but I'm going to probably start putting this out on the action trade alerts because I think it's such a good thing. Now, I'm maybe be putting a spreadsheet out each week on where in the market is getting the most love. Right now, the most love is in energy coal, but the problem with energy coal is there's only 6 companies in there, and they're not very big. So I'm looking to make an investment in the areas that are doing the very best. Number 2 is electronic semiconductors. So I've been trying to get my exposure there. That's why I bought AMD today. It's also why I have Rambus, because that's in there. Retail department stores. Now that's Kohl's KSS is coming through earnings tomorrow. That may be a good area. And then, of course, everybody knows about the oil and gas. Now, I've mostly sold out of my oil and gas positions. They've made their run. Oil and gas is starting to move down, even though the price of oil is starting to go up. Also, software database, consumer finance, solar, and automobile manufacturers. Now, I don't have any exposure in solar. Not a huge fan of this because I've gotten burned here a bunch of times. But I definitely like the computer software security area, computers, and there's so many areas of the computer software. They're starting to get lots of love there. So that's how I find them. So what I do is I find an area that I'm particularly interested in. Let's take a look at the retail. Now, this is the whole group. This is the whole retail group here that I'm looking at. You can see this is the kind of motion that I like to see. I like to see the whole group going up. So there's an old saying, a rising tide floats all boats. Well, that's kind of the deal here. We have a situation where the whole sector, this retail department store, is moving up right now. So what I'm able to do there is look in that and then look at the stocks. Which are the best stocks? Well, the biggest stock is Macy's. And if you've been watching this for a while, you noticed that you knew that I had trade on Macy's. Now I'm out of Macy's. I made some very nice profit on it. But basically, so I'm looking to see if there's an entry point in any of these 6 stocks. That's how I'm finding it. So I'm just going to kind of look and see what the good ones. I think this one, Kohl's KSS, which is going to come through earnings tomorrow. This one is probably out of the group the best one. So I'm probably going to be buying a position in Kohl's tomorrow, depending on how it trades through earnings. Earnings are in 2 days on Kohl's. So this is sort of how I find. This is sort of how I find stocks. I'm always looking to find stocks that are in the very best areas, and I'm looking where the money is moving. Right now, much of the money is moving into these department store stocks, which I wouldn't have thought at all, because I'm not a big department store guy. I mean, I go to Target, that's about it. By the way, Target is setting up very nicely too. But interestingly enough, I don't think Walmart is in that good a situation right now. But so what I do is I'm looking to see where the money is moving first, what sector it's moving to. Then I look at those to get the very best setups. That's a fantastic question. And I basically review the stocks on the weekend, and I'm always looking at growth stocks. So That's a great question. And and if you're on the list, if you're on the action trailer alerts, I do put out a list of the stocks that are ready to buy. So kind of interesting. Thank you very much for that question. Very, very much. Let's look at DocuSign and CrowdStrike. On DocuSign, DOCU. Now, I haven't been in Docu for a while. I did make some very nice money in it. I think you can see it. I'll show you the charting that I have on. I try to annotate my charts as much as I can, so sometimes they're a little bit busy. I basically was stopped out. You see this? This is what I mean. A stock will move up from its pivot, as it did, and then when it doesn't get enough strength, it'll pull back. Now, I was stopped out at 299. Currently, DocuSign is at 267. And it's sort of pulled back, and it's what they call basing, meaning that it's pulling back, it's getting its strength again for another run up. Now, would I buy it at this point? Well, earnings are in 16 days. I do like the area, computer software enterprise. The question is, have we seen a reversal? Have we seen a reversal in this one? I don't think so. Unfortunately, I still think, even though this is an investment quality stock, this little line that I'm drawing here is a reversal line. And what does that mean? Well, what that means is that as long as it's below that line, the direction of the stock price is downwards right now. So right now with DocuSign, I would not buy it. Now, if it moves above that line, and I put an alert on that line typically, let's see if I can do that. Then I'm putting an alert on that line, and if there's an alert on that line, when it moves above that, I now know that it's starting to continue its movement back up. So I don't like to catch a falling knife in that if a stock is moving downward, I don't want to be buying it, but as it reverses up, that's where I want to be buying it. So my impression of DocuSign right now, DOCU, probably not the best place, Hans, unfortunately. If you're in the stock and you're not down 7%, I'd hold it because I think it's a fantastic stock. And I do think it got some support at the 200-day line. But this is not a good entry point. This is not a good entry point for the stock right now. It just isn't. It may be though. If it can move right above this line here, this reversal line that I put on there, if it can move above that, then it's going to be reversing higher. Then it might be a really good place to buy it. Let's look at the checklist. It's got a strong checklist, as you can see, 89%. The only thing it's failing on is relative strength. I typically like to buy stocks that have relative strength of 80 or better. So that's kind of the long and the short of it. Good stock, just not the right time or right place to buy it. Let's look at CrowdStrike, CRWD. I know I'm probably going very fast on this, but I definitely enjoy sharing these things because it's a lot of fun. I mean, this is kind of like, and once you get used to buying stocks at the right pivots and everything, it's kind of like a game. I mean, you're always there's going to be a whole bunch of setups out there. You just have to find them. That's really the key. There's a lot of setups out there that are really good. You just have to find them. Now for CrowdStrike, CrowdStrike fell off, and there was a lot of selling here. I don't know quite why that's happening. This is what they call a handle, and I'm going to put a reversal line on the handle. So there potentially is a buy point above that line. That's how I would probably do it. Oh, no, that's not the wrong one. Is on that line. There we go. On this line, and you can see why I did it there. If it reverses above that line, then it's going to show strength. So right now, I wouldn't buy it, but I would wait and possibly buy CrowdStrike because I do like CrowdStrike a lot. I would buy it probably above about 279, 280. Right now it's a little weak, so I want to see that. I want to see this reverse confirm and then go further up. So that's kind of my take on both DocuSign and on CrowdStrike. They're both good stocks, but they're not in a position to buy right now. That's the main thing. Okay, SMEO. What about Chegg? Do you think Chegg is at a discount? Well, you don't want to buy at a discount. Here's the thing, everybody. When you're buying stocks, it's kind of like you're a retailer with like a little tiny 7-Eleven. That's kind of how I think about it. I only want to sell the stuff that's really going to fly off the shelf. I want to buy stuff that everybody wants to buy from me. So the whole strategy here is to find something that's in an upward trend. In other words, people are buying it, and then buy it, and then ride it up, and then sell it as it's pulling back. So that's a very good way to do it. So we don't, buying on discount. That's a different strategy, and there's many people that are successful buying on a strategy. But the old adage, buy low, sell high. I mean, it's not a good strategy in a trading market. You want to buy high and then sell higher as it's moving up. You're always wanting to just buy it and then ride it up a couple floors and then sell it. So let's look at, there's a question from, this is a question from Ian. Let's look at app. This is Digital Turbine. This is a cool company, by the way. So many, that's the cool thing when you're looking at all these companies, you get a really good idea of the check mark because you can see who the winners are and losers are. I do really like this company, but it did fall off the edge of the earth. See, again, we have this problem with earnings. This is always the danger in holding through earnings, and this was earnings right here. You see, for some reason they didn't make a number. Can you believe that they're up 193%, and an earnings surprise to the upside of 12%, and guess what? They still fell. This is why, everybody. You need to be very careful when you're buying, when you're buying, and you don't have a 10% cushion coming into earnings. You got to be very, very careful. Right now, you can't buy it, unfortunately, because it is in a pullback, and it's below that 200-day line. So right now, you can't buy Digital Turbine. You need to see it reverse and move higher. And it's a great company. It's got an 89 checklist, but it's just not at a position that you can buy it in, even though it had these tremendous earnings. By the way, what I'm doing here, this is called, let me see if I can, get it. Yeah, this is what it's called fundamental analysis. Fundamental analysis based on the sales and the earnings. Technical analysis based on the chart action. Now, on the fundamentals, Digital Turbine is doing great. Look at this. Last quarter, they were up 193% in terms of profit. So this is just chugging along with the profits. So this is definitely a worthwhile stock to buy as it reverses. Why? Because this will move higher based on these fundamental analysis. But the technicals, and by the way, you buy on a combination of technicals and fundamentals. So the fundamentals look really, really good on Digital Turbine. The technicals not so much because it's fallen below the 200-day line. But if this starts reversing above this 200-day line, this might be a place you could get back into it. So here's what I would do. I would wait for it to move above the 200-day line, and the 200-day line is basically 71.90. So we want to see it reverse here, start to see some blue bars, then buy it as it's moving higher. So this is definitely not a buy today. This is a watch list. And here's one of the ways you can. Here's one of the ways that you can do that. So I would watch list apps and wait for a reversal. And I think if you do that, you might be very, very, very well rewarded because, again, it's a very good company. The fundamentals on this say it's probably going to go higher based on any company that has where the profits are moving up as fast as they are with Digital Turbine. I want to show you this. Eventually, is going to move higher. Okay, now, but maybe not in the short term. The sales have been phenomenal for Digital Turbine. Look at that, 142%, 260%, 338%. So the fundamentals look very good. And look at those profits. They're just moving right up. We have positive cash flow, and I love that on a growth company. But the technicals are not good. It's below the 200-day line. So eventually what's going to happen is when the funds realize, hey, this really is good based on its technicals, this is going to reverse higher. But right now, we have kind of this, we kind of have this reversal thing going on. So here's what I would do. You got to wait on this one, but just keep coming back on this one, because this is a great stock and it's in a good area, and everything is really good. It's just not a buy today or tomorrow. Wait for it to reverse. I think it'd be very, very well rewarded. Well, I didn't get to everybody's question. Let's see if I can do last one. Let's look at Upstart. Thank you, Ricky, for that. I'm very interested in this stock. I don't own it, but I like it. Now, the chart is a little bit. The chart here is a little bit challenging, to say the least. On the weekly chart, as you can see, we have this downward. We got to 400. We got resistance at 400. By the way, it's very interesting. Jesse Livermore, almost, I guess, 90 years ago, was really one of the first really great chartists out there. Jesse Livermore. If you ever want to look at something very interesting, how to make money in stocks, you should look up the name Jesse Livermore. He's the guy that made an absolute fortune in the Great Depression, and very interesting, very astute. Stocks tend to trade at whole numbers. So if you notice, this is really interesting. Upstart Holdings here, it came all the way up, and then once it got 400, people said no, and then it reversed, and then they went through earnings. Even though their earnings were up, look at that. Even though their earnings were up, it fell back. So it looks like it's maybe starting its reversal, because we did have a blue bar today. That's very, very good. But we need to have it confirm. We need to have it start moving up. So here's what I would do. I'm going to draw this reversal line right here. And really, this is kind of where, let me do that again. This is the reversal line here. And what I'm doing here is, this is the area that if it can move above this line, then it's starting back on its upward trend, see? And if that happens, I think that we could be in for some very good action. There's just a lot of speculation in this, even though basically people bought it and then it was a downward trend, even though the fundamentals were good, and they sold it. But the question is, if it starts moving back and reversing higher, then I think it's going to be very good. Let's look at the fundamentals on this one. Again, just tremendous in terms of the amount of sales. Their sales are up 250%. That was last quarter. Their profits were up just tremendously. So eventually, based on this stock is going to reverse, and it's going to reverse higher because of the fundamentals. But remember, the fundamentals here show us the long-term prospects. The technicals show us the correct entry point. So right now with Upstart, I think you gotta watch this and wait for a reversal. But there's a good opportunity when it reverses. But if it does, that's a good place to buy it. So right now, wait for the reversal to buy. And that's really kind of, that's just kind of what you got to do on it. But this is a very good stock. Don't buy it right. Oops, that's on tap. Sorry about that. Yeah. So wait for the reversal on that to buy Upstart. Still great. Want to watch list it. And it'll provide a very good opportunity. Well, everybody, I have run out of an hour again. I could just do this for hours and hours. I didn't get to everybody's question. I will be back tomorrow. I will be back tomorrow. Hopefully, hopefully I will. I will be back tomorrow, God willing. And we'll go over some more stocks. It's a very exciting time right now. We're coming into the holiday season. This is traditionally one of the best one of the best quarters of the year. It's a great time to be in the market, regardless of what people are telling you out there. I don't know how long this is going to last. Probably through Christmas, maybe into New Year's. Then we'll see. But right now, we're in I think the beginnings of a little bit of a Santa Claus Rally. There's a lot of capital that needs to find a home, and if we could just ride along with that, we can really do well into this last quarter. So hopefully we're going to make some money here, and I will be back tomorrow at at 3:30. Thanks, everybody. By the way, if you want to get on the on the action trade alerts, or you want to sign up for the Discord room, just go to www.Dallas Trading Floor, and you'll see it's an easy just buttons you push, and you can. And the Discord room is a paid service, but boy, a lot of people have gotten a lot of good value out of that. So, and we have testimonials if you need that. Also, if you want to get on the free action trade alerts, super duper easy. This is the mailing list, but we include things like spread trades and lists of things that are actionable. So this is a great way to get your toe into the water. And by the way, if you want to learn this system that I use to trade stocks, it's called CanSlim, and you can find out more about it by going to the website www.Dallas Trading Floor, just looking down and then pressing on the button, and it'll direct you to the site on Amazon where you can buy the book. It's a tremendous book written about 40 years ago by William O'Neill, one of the greatest traders ever. And by the way, he's still alive. Okay, I will be back tomorrow again. And everybody, thank you so much for dropping by. Please tell your friends. I need to get more people, and please like it. Please like it. See, I've got my little like thing going on there. Please like it, and please subscribe. We really appreciate it. I need to get more people, of course. And but until tomorrow at 3:30, thank you everybody so much, and I will see you. Happy trading, and we will be back tomorrow at 3:30.